I'm Priscilla Barrera with the Investing News Network, and here with me today is Anthony Milewski, who's chairman of Conic Metals. Anthony, thank you so much for joining us today.
Thank you for having me. It's always a pleasure.
All right, so I just wanted to start talking about the cobalt market. Did the market perform as you expected at the end of last year?
Yeah, so the cobalt market, as you know, has really kind of fallen off since its high, almost 2 years ago. And I think what we learned is the artisanal response in Congo is real and material. And I think one of the upshots now of the cobalt market is we're going to face kind of a period now for a year or two of moving sideways, trading within a band. And that's in large part because of the fact that we now know where artisanals come in that $18 to $22 range in terms of pricing. And there's a little bit of excess in the market that we have to kind of move through as a result of that spike that we saw a year ago.
All right, and let's touch a little bit on cobalt prices. Prices declined for most of the year. We saw them rebound after the Glencore Mutanda news. Now they're stabilizing. What do you expect to see in 2020?
Yeah, so in particular, late summer, early fall, we saw a large amount of super alloy demand. In other words, the cobalt market is really a metal market and an intermediate market. So we saw a big kind of bump in that metal demand, which helped propel the prices forward. And then even in the last few months, we've seen the payabilities on hydroxide also increase materially. So what we've seen is from that $12 low, we've seen people say like enough is enough and come in and actually buy material. And so I think for the next kind of 6 to 12 months, it trades in a range with probably a high in the low 20s and probably potentially trading down depending on macro news around trade wars and all these sorts of things in a band in the mid-teens.
All right, and are you still bullish on cobalt?
Look, I'm exceptionally bullish on cobalt. I just think that when we really started looking at cobalt initially, there was this question, is there enough cobalt? And I think we know now definitively that there is going to be enough cobalt, although that cobalt is largely going to come out of the Congo, and that's even going to increase with time. The percentage of cobalt is going to increase. The percentage coming out of the Congo is going to increase. And so I think what we have now is a moment where we have to figure out the supply chain, and we have to figure out ethical sourcing. And I think the market needs to understand how can we integrate artisanal cobalt supply into the supply chain and not have child labor issues. And that's not been solved yet. And there's a bunch of ideas on how to do that. Some people are looking at the Kimberley process. Other people are looking at blockchain. But that really needs to be resolved. And so I believe what you'll see is over the next kind of year or two, companies, not just the Glencores, but some of the other folks out there, will kind of come up with methods to ethically source that cobalt from the Congo and manage that, as opposed to what happened last time, which was when cobalt ramped to 44. It was like a wave, a tsunami of cobalt coming in. So they'll be able to manage that, and that management will coincide with EV adoption rates, which are going to put significant pressure on cobalt. Remember, in modest EV adoption rates, you're talking about a market that goes today from 130,000 metric tons to 250,000 metric tons. So this is a lot of cobalt. I think another thing about cobalt that viewers should consider is that the new projects in Indonesia, a lot of the ratio in cobalt is almost like a 10-to-1 ratio. And why is that interesting? Because that actually kind of matches the ratio of the battery that we're heading towards. So I think look, ultimately this is great news for cobalt. I am bullish cobalt. I do think that cobalt ultimately does trade a lot higher than it is today. But I think that we got to work through some of the excess supply that came on. We've started to see that, and I think that we're going to continue to work through that in 2020.
All right, and let's just then switch gears for a second and talk about the nickel market. This year we saw prices spike compared to gold. I think nickel's been trading pretty high. Do you expect that to continue in 2020? What are you seeing in the nickel market?
Yeah, so first of all, we're incredibly bullish nickel in large part because of the way the chemistries are going. So initially, if you recall, chemistry started off as a 1-1-1, right? The ratio between nickel, manganese, and cobalt. Over time, that's evolved into a 5-3-2. There's some debate as to whether 6-2-2 is ultimately skipped as a chemistry. 8-1-1, now some people are saying 18% of the market in China. There was a report out this week saying that they're 18% of the market in China. And beyond 811, by the way, there's 9.5, 2.25, 0.25. So, you can see that there's this optimal battery chemistry, which is very nickel heavy. So it's going to put a pretty significant demand on the nickel market in the coming years. And so what do I think has happened or propelled the nickel market in the last year? It is 100% not batteries. Like unequivocally, there's no relationship, right? I think a couple things propelled it. One was simple politics around Indonesia and a ban. I think that was a big one. And then there was destocking of the LME. And I think people are still trying to figure out if that destocking was a steel buyer forward buying, or if that was someone taking a view on Class 1 nickel. In other words, buying briquettes today because it's cheaper to buy and hold them, a carry trade, than it is to mine in the future. So I don't think the market, there's a lot of rumors, but I don't think the market actually has a really clear view on what that destocking was in the LME. So long story short, I actually think that you will see a continued rollover in the nickel price in the short term, only for it to stabilize. And then the big nickel move, is not happening at the moment, to be clear. This is something else.
All right. And I just wanted to ask in terms of the high nickel cathode adoption. With nickel prices so high, does that make the adoption slower? What are you seeing?
Well, remember, nickel prices right now are already rolled back down to 15,000, and on a historic kind of basis, like they're not even close to the highs. So I don't think this move is related to batteries, and I think, frankly, it's going to roll over. Now, I do think, and this is important, to meet the 2030 adoption targets for nickel, you're talking about needing $60 billion of infrastructure investment into nickel projects. And so, you need a material amount of nickel, and I do think that will require a higher incentive price. Remember, the nickel market is 2.4 million tons, okay? Approximately 1.2 million being sulfide and the balance being laterite. Sulfide is really great for making Class 1 nickel. Laterites, through the HPAL process, you also can make that Class 1 nickel. But the pig iron, the crossover into Class 1 nickel is exceptionally expensive. And so the price you would need for that material to actually impact the Class 1 market, I think, is maybe a double from here. And so what that means to me is that, one of the things which I think has scared investors away from nickel is the memories of 2009. So in 2009, what happened was the Chinese came up with this new processing technique which transformed the market and crushed nickel price because it allowed for laterite ore to be put in the nickel pig iron process. And I think investors who have a long memory are sitting here thinking that someone is going to come up with an inexpensive way to cross material over from nickel pig iron into Class 1 nickel and then ultimately have it used in batteries. And what I could say is I don't think that's true. In the examples out there, the CapEx outlay is $6 or $7 billion, which is completely undoable today. So from my perspective, this market is really a bifurcated market without a much higher incentive price to cross over. And so we are going to need to see material investment into nickel in the coming years to meet that Class 1 demand that is going to be increasingly desired as that shift happens. And we can see even from a report Adams put out in the last week that 811 has an 18% penetration rate in China today. So that switch is happening. And I also think realistically, nickel is a big commodity relative to cobalt. If you're ultimately a producer of either the automobile or the battery, you feel much more comfortable around nickel because nickel is produced in Canada, in Australia, in Indonesia, in PNG, in Cuba. So you're not kind of beholden to a single jurisdiction. Whereas, as a battery maker with cobalt, you're going to have this 85% concentration in the DRC. And so I think, it's pick your poison a little. And I think you would much prefer nickel being the lead commodity inside of that chemistry, because ultimately you can get it from a bunch of different places. And so I think that's part of the balancing act. And because it's a primary commodity, unlike cobalt, which is really a secondary commodity to either nickel or copper, because nickel is a primary commodity, you can build another nickel mine. And so it's not going to be the case that we're just out of nickel ever. Whereas cobalt, as a byproduct, you have that complication that in certain instances, like a war in the Congo or something like that, you could have real supply chain problems. Whereas with nickel, ultimately, there are a bunch of projects out there in the world that could be built if someone wanted to do it.
All right, so you just spoke about the challenges being investment in the nickel market, and you're talking about adoption happening in China. I just want to touch on adoption for a second. So we know China is going to be at the forefront of adopting these high nickel cathodes. When do you expect that to happen for the rest of the world?
Yeah, I think it will take a little time, and the reason is one of the things you sacrifice as you move from a high cobalt chemistry to a low cobalt chemistry. One of the things you sacrifice is safety. Thermal runaway temperatures decrease. In other words, the temperature at which the battery catches fire and it becomes exceptionally hard to put out change. And so I think in the markets in Europe and the U.S., that transition will take longer because the regulatory burdens will be higher, insurance will be more complicated. Whereas in China, they have this government commitment, right? There is this at the top level of the country, they've committed to this transition, and so they're much more able to push it through. And so I think what will happen is China is and will continue to lead the world in the chemistry development, and I think in the West what will happen is it will just take a little bit longer for battery makers, automakers, insurance companies, regulators to feel comfortable around the safety related to it. And I don't want to mislead people and say it's completely unsafe. It's just a reality that as you transition to a nickel-rich battery, you have to understand better that fire hazard.
All right, so let's talk a little bit about your company. We transitioned from Cobalt 27 to Conic Metals. Just wanted to ask you about your strategy moving into 2020. Has it changed? What is your approach this season?
We are exceptionally excited about Conic Metals. Justin Cochran is the CEO. I'm the chairman. This is a nickel vehicle that has cobalt, and in a lot of ways it reflects the battery. If you look at Ramu, one of the best producing, most efficient HPAL mines in the world, producing at over 100% of capacity, been producing since 2012. We kind of do 40,000 metric tons of nickel a year, and another 3,500 in cobalt. The ratio is kind of 9:10 to 1, so it actually reflects the battery cathode ratio. So we're really excited about these assets, and we are, in the first instance, a producing nickel company. We're going to be the most investable pure play on the TSX. Sherritt's also there, but for some people, because of Cuba, Sherritt's uninvestable. So we're going to be the alternative. In addition to that, we have a royalty and an equity position in Giga, which is Turnagain. Turnagain, one of the largest undeveloped nickel sulfide deposits on Earth. It's an ESG-friendly, carbon-neutral project in Vancouver where people can get really what you would call green nickel. So that's exciting. We also have a royalty on Dumont. Once again, an interesting project in Canada, large scale. And then we have a handful of royalties in Australia. Once again, all nickel, cobalt royalties. So, I think what we've done is reimagine the vehicle, and we kind of have made it look and represent really the cathode chemistries. And so when you're buying it, you're kind of buying the cathode chemistry, which we think is exciting. We were cobalt heavy, and now I think we've righted it and sort of made it reflect where the industry is going and where it's going to be for the next decade.
All right, and my last question for you today, Anthony, what factors are you going to be paying attention to in 2020 that could impact both cobalt and nickel?
Yeah, I think for cobalt in particular, really focused on the Congo and Glencore. What happens to Mutanda? There are rumors that it's for sale and the Chinese are looking at it. I don't know, but I think that is a big question. Obviously, if a non-Western party bought Mutanda, that would be very bullish for Congo because that means that cobalt is going into somewhere else. Or if there's some sort of political unrest. So I think really 2020 is about the Congo for cobalt. The super alloy buyers have bought for next year, and as EVs continue to ramp, the pressure on the cobalt market will continue to build. So that's what I'd be watching in cobalt. Nickel is a little different. I would say that the stainless steel market, LME, destocking, and Indonesia have largely driven this nickel run. And so I think you have to watch that and see what happens. I think one unfortunate consequence of a rollover would be a potential loss of some investor interest, and that would be a mistake, because ultimately, to put it in perspective, to meet 2030's nickel needs, we need something like 10 Ramus to come online, 10 for $60 billion, and then that's not in the pipe, and so we're going to need more investment into the sector as a whole. And so I think it's kind of watching the balance to see what happens on the industrial run into nickel right now. And hopefully, nickel trades in a range and it doesn't spike up or down, so that we can move forward towards ultimately meeting the demands of the EV industry in 2025 and 2030.
All right, Anthony, thank you so much for being with us today.
Thank you very much for having me. It's always a pleasure.
All right, once again, I'm Priscilla Herrera with the Investing News Network, and here with me today is Anthony Milewski, who's chairman of Conic Metals.